Welcome to the We Fucking Love Startups podcast. I'm your host, Troy Hammond, and on today's episode, we're chatting with Mark Clare from Clare Capital. Startups in New Zealand have had a phenomenal 3 or 4 years. So many acquisitions, so many exits. We've seen a lot of money filter through the community, and Mark Clare from Clare Capital has been integral in part of that. He's someone that I actually I engaged with when I was going through a process, and so I wanted to get him on the podcast and talk about what the hell does an investment banker do? How can they help us? How can we better be prepared for an M&A process? And he's a lovely guy, so enjoy it.
Kia ora. Thanks for tuning in to the We Fucking Love Startups podcast, brought to you by Talent Army.
One of our biggest challenges in our industry, like with tech, is the sort of diversity one.
Yeah.
And we've been doing a bunch of work talking to sort of various women and, minorities coming through and sort of saying, well, what's the perception of investment banking? And it's terrible. And
Pressures a recruiter here, man.
Yeah.
Yeah.
And we were, and our last hire was a fantastic woman, Laura, from who came from one of the big four consulting firms. And she originally she said, I looked at it and she said, I don't want to do that. And luckily, some people talked to her and said, no, they're different to the standard investment bank. And she came in, and I mean, I had a one-on-one with her yesterday, just sort of chatting through a bunch of things. And she was like, oh yeah, anything I can do to help some of that stuff through. And I was like, we need to tell more stories about what it's like. And we've just gone through a big rebranding thing with the Ocean Design team. And
beautiful website, man.
Yeah, thank you. It's our previous website was something 10 years ago. But yeah, it's been really good talking and hearing people say a couple of positive things around it. So it's good. Yeah. So
awesome.
I mean, we're trying to say we're different, and because, there's a perception that investment banking is a certain thing. And again, we're trying to do some of that differently.
Yeah, man. And that's evident, man, because I hear the exact same things about Clare Capital as I hope that people hear about Talent Army, in that, like, when I started asking some questions around this space, I got, go and speak to Clare Capital. They get it. They're different, right? And that's, for me, in an industry like tech especially, right, where if you're an investment banker, recruiter, lawyer, and you walk in with your suit, people are like, oh, what the fuck's going on? Yeah. And so most of our clients don't even wear shoes, let alone a suit, right? And so...
Well, the classic story I tell is, like, we've done a bunch of work with Mike O'Donnell from back from Trade Me and that, and I turned up originally, a decade ago. We started in suits and would put the jeans on and things like that if we were seeing some of the tech clients. Yeah. And I turned up at Trade Me in a suit, and Mod met me in the reception area. And he just looked at me, and the look of almost disgust on his face was like, Mark, I'm going to let you in this one time, but if you wear that again, there is no way you're coming back in here. And at the same time, we started doing some work with Xero and people like that, and again, pretty quickly became, instead of, we had jeans in the office to wear down to certain clients, it got to the stage where there was one suit hanging up there, and we've reached a stage now where I wore a suit to see somebody had come in from Japan a few years ago, but that's literally the last time I can think of doing that stuff. Where a lot of our competitors are still a lot of the investment banking things still sees themselves that way.
Yeah, man. I remember having a coffee with, like, one of the founders of Google, like, in the States, long time ago, right? And I said, hey, so I'm thinking about starting up this new recruitment company in New Zealand, and from your perspective, can you give me any advice? And I was in a $3,000 suit with beautiful cufflinks and a nice watch on, right? And wearing my best gear to sit down with this guy. And he was like, you get rid of that fucking suit thing, man. And I was like, dude, this is my best. These are my best clothes. And he was like, yeah, but you don't need a suit. Like your target market, wears hoodies, and they wear this and that. And I was like, yeah, but and he goes, no, you're you. And I said, but my whole industry wears suits. And he said, well, be the person, to break the norm. And so I wrote a blog that day, and I was like, my company is no longer going to wear suits and blah, blah, blah. And we got laughed at by the industry. Everyone's like, oh, this fucking try-hard renegade. And now no one wears suits, right?
Yeah.
And so we can just be ourselves.
Yeah, well, I mean, we got quite a lot of, I mean, I had certain people come through and go, oh, Mark, you're all looking, that's not how we do things. And it was sort of like, and exactly as you were saying, we're now seeing, I bumped into one of the team from KPMG the other morning. He's like, oh no, I'm so pleased we're out of suits and things like that. And I was like, yeah, when the big four accounting guys are out of suits and that, things have changed. I do feel for the working style guys and that around it, and go, man, your business model must have changed quite a bit with just
Yeah, man. So when I think about like Clare Capital and these companies, like why is it different? Why do we hear that they're different, right? And I think for me, it's because, from my knowledge and understanding of you and your team, you don't wear the mask. That is corporate bullshit business. Like, you are yourselves and you resonate with your clients because they authentically believe you guys. Is that fair to say, do you think? Or
yeah, look, the one thing we do a bunch of stuff differently to some of the other investment banks, but at a core, like, my background is working for the likes of other investment banks such as Cameron Partners and places like that. And the work and the approach that we take is still grounded in, how we solve problems is the structured corporate finance sort of bottom-up thinking that you would see in a place like Cameron Partners is, very much has influenced a lot of the same approach that we take there.
Yeah.
But the thing we talk about is it's structured thinking with an edge, and part of that is exactly that bit of sort of dropping that that corporate mask.
Yeah.
I know likes of JD from Raygun, and I think he's a guest coming on in the not too distant future and things like that. JD tells a funny story where he asked me a question at one stage, and I sent him an XKCD cartoon as my answer, and he was sort of like, yeah, I've got the right guy here. He's my man on some of the stuff.
Yeah.
But one of the big four asked us, because they had a client and they came to us and said, oh, look, we've got this problem, and I said, well, hold on, you're doing what we're doing. And he said, well, I'm just really not sure how to answer how to deal with this particular problem. And so we had a bit of a look at some of the stuff, and I ended up sitting down with the other advisor who was in a suit and their client who was a tech business. And the guy said, well, how do we think about this? And I quoted an Eminem song around the solution. And the guy from the Big Four was like, what are you doing? And it was the sort of, and the client was like, no, I get it. And what I was, the argument was part of what I was doing was trying to find a way to bring that structured thinking, but in a way that the client could sort of turn around and go, okay, yeah, I can see where some of that fits, fits together. What was the song? It was, what was the one around it? It wasn't Lose Yourself. It's the one, I am whatever you say I am, because otherwise why would I say I am? And is the lyric. And that was the bit I came to, because he was at that stage where it was one of those incredibly geeky revenue recognition issues around revenues. And at that stage there was sort of dispute between how to recognise the revenue, and there were different pieces in the literature around it. And I said, well, it's so unknown at the moment, because he was trying to negotiate something with a private equity fund. And I said, just say it is, because if you say it is, why isn't it, type thing? And he was like, I get it. And he ended up doing that and got the right result. So yeah, I mean, yes, we're still, I wouldn't want people to think that we're flying, like a lot of our work is very based on structured, theoretical, strong frameworks within sort of academic literature, but we're definitely trying to find a way to layer some of that sort of edge to some of it to help make some of it a lot more relatable and things like that.
Awesome. So let's rewind then, because you haven't always been Clare Capital. Where did Mark Clare start out? Did he start out wanting to be an investment banker? Finance
was always what I wanted to do. again, my grandfather had been the managing director of the old National Bank here in Wellington, and worked in London. Again, it's one of those, I recognise I come from a big element of privilege there. So hearing people talk about, they being the first person that had been to university or something. My grandfather, who was born in 1906, had a master's degree from Otago University. I've got a master's degree, so I'm only catching up with my my grandfather there around it. So finance was always something I was interested in, wanted to be part of. And if you turn around and go back and talk to a 20-year-old version of myself, and if he could look forward and see what I'm doing now, 20-year-old Mark Clare would be very, very happy with, I'm 52 now, would be very happy with where I've ended up and the work that we're doing.
Yeah. And so what was your first job out of uni then?
So, first job out of university. At the time, I really wanted to be doing work in finance, but it was early 90s, and the stock market crash had still been a thing around it. And I got some good advice from somebody which said, look, go and do an accounting degree and have that accounting base, because things are going to be tough for a period of time and you'll never regret having that accounting degree. And I got an accounting degree with a bunch of finance, and my first job out of university was working in audit for KPMG. Yeah. And
good training ground though, right?
Yeah, fantastic training ground. Look, KPMG is a wonderful organisation, and deal with it still today. But it's safe to say the counting of the beans and audit and things was the last place and that I should have been and what we should have been doing. So pretty quickly worked out that wasn't where I wanted to be. But it's a great trading place.
A good mate of mine said the exact same thing. He started at KPMG in audit and risk, Rob Marshall, and he unfortunately didn't get out of it. So he's now got his own Grant Thornton affiliated technology risk and assurance business. But
yeah. Look, I mean, the comment that I say is, look, there are three. When I'm looking for people and what is the basis of my career, there's almost three parts, and one of those is absolutely being able to do debits and credits. Yeah. In our game, being able to look at financial statements and understand that molecular level of how a company's numbers look like is absolutely vital. Yeah. So the thing I say is, first thing I'm looking for is debits and credits, which is what I got from that stage. The second stage that I'm looking for is, forward-looking numbers, which is where I quite quickly worked out I was far more interested and better at looking forward rather than looking back, and then being structured in the thinking. And if you can do those three things, that's a key part.
So for the layman that doesn't understand financial modelling, what is forward thinking?
Yeah, I mean, so the difference there is, if you look at accounting is all about, what did we do? What was the financial results for, the last year, or working through some of the pieces there. Yeah. And that's really important. You've got to have, you've got to be able to, people have got to be able to go, well, what actually happened, and what was the result of that from a revenue, profitability, cash perspective. But that's really important to capture that. But when it comes to sort of more of the more uncertain problem-solving things, it's more about what happens moving forward. Yeah. And one of the first pieces of work we did at Clare Capital really early on, about 2014, Xero came to us and said, look, we've got this financial model which is all about what Xero's financial performance would look like moving forward. It's not as, it's been built over time. We want to put together a really robust thing that we can use to plan. A talent army would have something similar, or maybe not, where you go, this is what we expect to happen over the next couple of years, and this is what the expenses and revenues and that will look like, and to be able to project cash requirements and things like that around it. So part of that is about being able to then look forward and say, what do we expect to happen here on some of the things that are around it? And that's got a bunch of implications for, when people are trying to value companies and things like that. It's not about what you've historically done, it's about what you're going to do next and how valuable, what those cash flows are all about.
Go get that 10 times revenue, right?
Yeah, I mean, there's a lesson, unfortunately, in that lid. Again, we'll probably come back to that on some of the stuff. But yes, and one of the first pieces of work and analysis we actually put out in the public domain, 10 years ago, under the Clare Capital brand, was a piece we did around Xero. And one of the drivers of that is, probably similar to yourself as to why you started this podcast. I was sitting in the back of taxis and talking to people, and a whole bunch of people turned around and said, oh, that's Xero, man, that's a Ponzi scheme. They're losing money and things. And in corporate finance, there's the basis of value in corporate finance, I think, called a discounted cash flow model. And I won't get into all the detail there, but a key part of that is one of the things we say is losses are fine as long as value is being created.
Yeah.
And what that means is you can lose money now in the short term if you're going to if you're building a big business which is going to throw off a lot of cash down the track. And that was pretty obvious what Rod and the Xero team were doing. They were investing a lot of money as a bit of a land grab to get as many customers on. And when you looked at it, if they stopped growing, man, they were going to throw off a lot of money. And we wrote a piece of analysis, and Rowan Simpson always laughs about this because the first line in it was Xero is not a Ponzi scheme. And I know, with a $20 billion, or I don't know what Xero's market cap is today. But yeah, I mean, at the time, people were going, oh, it's never going to make money. It's never going to be a valuable company. And again, understanding, losses are fine as long as value is created is part of that forward-looking side of things to go, well, yeah, where does that fit? Which does come back to your SaaS revenue multiple one there of going, well, if I've got a SaaS business, it's worth 10 times revenue, isn't it? No, it's not. But well, as my team would say, it depends.
Yeah, or hockey stick growth, right? Like we're just like we know that if we build that revenue with hockey stick growth, we're going to get X return. But
yeah, potentially. But again, there's a bunch of things that go into that as to how big is that market. Secondly, what level of scale of revenues you got now? Because if you got nothing now and you go, oh, it's going to be huge down the track, you've got a problem.
Bullshit in our numbers.
Yeah, well, but also, I mean, how. One of the things we talk about is the unit economics behind it, and that was when we first started talking to Xero weren't putting out their gross margins and some of the pieces around it. And it was interesting to see them realise they needed to tell that story lid. Not only were they growing fast, but they were growing fast with real SaaS software unit economics, which is, does the business actually make money? And when you strip everything back, will that actually fit there? And a lot of businesses we see or come to us go, oh yeah, I'm a SaaS business, but they don't actually have they don't have the proper underlying financials which actually justify that. Yeah. And then your next part is to justify that 10 times, or what does that revenue multiple look like? It really comes down to how fast you're growing. Yeah. So and there's a big difference between if you're growing at 200 or 300% versus growing at 20% year on year. I mean, one of those is worth 10 times and the other is not.
Yeah, indeed. The recruitment companies definitely aren't, unfortunately.
Yeah, for what it's worth, neither of us are investment banks. And, we sort of sit there and, it's we have some different, we're services businesses as well. So understand that.
Yeah, well, you were invaluable when I had someone approach me for an acquisition, and your advice was fantastic. And you were, you didn't ask for any money. You just gave me your phone number and said, anytime you need a call, give me a call. And like for me, that was just like very admirable, mate. So thank you.
No. Look, it's one of the things around it. One of the things in setting up Clare Capital, I wanted all the way along. We've tried to give more value than we've necessarily captured or in the terms. And we have quite a lot of people come to us, like you did, where you had a range, you'd been approached by someone and you weren't quite sure how to think about some of the stuff. And we're always, the comment we'll say is we'll always take a call and help people to work out, whether that's something they want to move forward with or not. And we'll never charge for that. And again, there are times when people go, well, actually, hold on, this is getting real. Yeah, I need some help. Yeah, we'll come on board and assist with that. But we're always happy to do that. And I mean, even one of the comments we make to people, because one of the mistakes we're seeing a lot of the tech companies make when credible people come through is, New Zealanders have that DIY mentality, and they go, and if you're in Europe or North America, and if somebody approaches a company, they will typically get advice in quite quickly. And one of the things we've said to a bunch of people is, just don't be afraid of using our name, even if it's just if they go, have you got an advisor? I always go, just even if you haven't talked to me, I'm happy for you to sort of say, we've got, Clare Capital, do some advice for us, and then to pick up the phone to me and have that conversation. Because if nothing else, if you turn round to a party that reaches out, if it's a serious, credible party, and you go, have you got an advisor? A lot of them think, they'll think that's a bad thing. That, to be honest, no. Most of the time it's, probably with some of the same stuff with the recruitment thing. If they know they're dealing with an experienced counterparty, that actually makes a lot of the process easier. So, we're always happy to, do those types of things and that around it.
Yeah, awesome, man. So two questions. So firstly, what does an investment bank do for people that are listening to this? And then the second part of that is, like, if to go back to your career, was there strategy for you in terms of how you crafted your career to get to where you are now?
Yeah.
So, but fundamentally, like for a lot of people that are hearing this now going,
yeah, no, totally.
What do you do?
Yeah. So investment banking is one of the most misunderstood things around it, because people have a perception of, pinstripe suits, aggressive white males, doing all sorts of things. And is it people, behind a trading screen, or, what does some of the stuff work? And there are a number of different parts that actually encompass investment banking, and there's a number of different ways around it. So if you look at somebody like a Jarden, or a Forsyth Barr or a Craig's Investment Partners, they do a range of everything, which covers everything from advisory work, which is similar to what we do, to broking, typically wholesale broking, which is trading shares for big financial institutions, to asset management, to retail funds management. So you can see it covers a whole lot of the stuff there. An investment banker like myself, we work purely down in the advisory side of things. So my firm at Clare Capital, we do three main things. So the first of which is mergers and acquisitions. So that is helping companies, predominantly companies, to buy and sell other companies. We work predominantly on the sell side, which is helping people that are selling a business to be acquired by someone there. Now we work on that at the big end of town. So we've done, we ran Xero's internal M&A program for a period of time. We've sold for you had Kristen on who'd been the CEO of Hatch. We sold Hatch for Kiwi Wealth. Yeah. We do work at that. We've done some work for likes of NZX and some of those bigger parties there, but we're particularly well known for helping entrepreneurial companies that are going through that a sale process there, to usually with a big party to assist them through that process. Examples of that are, we've recently just assisted the .loves Data team with their acquisition by ANZ. We helped the homes.co.nz team be bought by TradeMe. Yeah. You had Mickey on, who was the chairman of Star Now. We helped Star Now with the sale to Backstage. So a big part of that is where the people that will manage the way through that process, and I and my team are the people which will typically negotiate the deal as well.
So not a brokerage, right? So people are listening to this to think, if I approach him, he can help me find my company a buyer. But you're engaging once there've been some interest is shown to them?
No, we will be that. The broker analogy is one which we don't love, but it's well understood. There are, using Hatch as an example, Kiwi Wealth got us in to look at what the strategic options looked like for Hatch. So there was a bunch of work done around, what Hatch could do from raising capital, strategic partnerships. Was there a sale option there? And once they worked out they the shareholders of Hatch decided, it wasn't strategic for Kiwi Wealth and the Kiwi Group Holdings component there around it, we do then go out and find the buyers. So we will run a structured process to help people find those buyers to sort of come in.
Excellent.
Yeah.
Cool.
So I normally say that mergers and acquisition stuff is 75% of what we do. But recently, over the last couple of years, with just the amount of tech M&A that's been going on, it's been sort of more like 90-95%.
Yeah, we've had a good run, right?
Yeah, it's been a really crazy good run.
Yeah.
So the second thing we do is what we call corporate finance advisory. I talked about we built that financial model for Xero. We built a financial model for Xero. We built Pushpay's financial model pre-IPO. Done a lot of work for Plexure and Sequent, helping them with financial modelling and metrics to how that stuff moves forward. That encompasses, people come to us a lot and say, I need you to, I want you to tell me what my business is worth. And we're like, well, we don't typically do that, but that's part of that corporate finance advisory type stuff as well. That used to be 10-15% of what we did, but we're literally, because there's been so much M&A activity we've done, virtually none, we've been pushing a lot of that work away.
Yeah.
And the other area we do a little bit of work in is the capital raising side of things. So we help the likes of Apply ID, which is a Know Your Customer AML play, raise $8 million from Octopus Ventures in the UK about a year ago. We got a couple of capital raising mandates, but it's not at that early stage. It tends to be more people that are looking to raise sort of substantial private equity rounds around it. And we do a bit of that. We've got a couple of mandates going through there at the moment. Think mergers and acquisitions, buying and selling of companies, advisory on complicated financial modelling and metrics, and a bit of capital raising work, and that's the core of what we do.
Awesome. So then, did you strategically go through your career then to get here now? Is it the decisions that you made earlier by leaving the audit team? Did that get you here?
Again, I've been listening to a range of your podcast interviews, and one of the fascinating things has been hearing about people's journeys through that.
Yeah.
I was pretty strategic on what I wanted. Leaving KPMG, I knew I wanted to be doing something very similar to what I'm doing here. I was playing some football at the top level here in New Zealand for a period of time. So in my 20s, there was a bunch of that. And I also got to spend a bunch of time living in North America and
top level of football, right?
Yeah. I played sort of National League level, and I have 1A international for New Zealand. So I played. It was a serious thing for me for a period of time. But then worked out that I wasn't going to make the key steps, and it was time to.
How was that the moment of realization that, hey, this is not going to be my forever life?
Yeah, I actually knew Lid pretty early on. Don't get me wrong, I loved it. The football was. It's still something I'm deeply passionate about. We got a big TV in the on the wall in the office, and we had the Champions League on this morning, watching the whole team watching some of the stuff. So don't get me wrong, I absolutely love it. But I knew, being a New Zealander, it wasn't there wasn't the pathway. Yeah. And when I was playing, it was the sort of early to mid 90s. And I mean, this is pre-Super Rugby. There wasn't almost any professional sport in New Zealand, and I kind of knew that there was going to be something next, and I wanted it to be, I wanted it to be pretty much what I'm doing now.
Yeah.
So when I spent some time overseas, and when I was in London, I basically targeted working for a couple of the big investment banks over there. So I ended up doing a whole lot of work for Citigroup when I was in London. They were keen for me to stay in London or to go to New York. And my then girlfriend, now wife, and I did a trip to New York to check some of that out. But we really wanted to come back to New Zealand and see, I'd been away for 3 or 4 years, and I wanted to see if there was I knew people New Zealanders that had stayed in London for a long period of time, and I could see that path, but I love this country, and I wanted to come back. So,
which is a big decision, man, because like I recruited IT recruitment for Canary Wharf there, and it's a good life.
Yeah,
like
we were living in a 1-bedroom place in Notting Hill. My wife was working for girlfriend then was working for an advertising agency. I was working for an investment bank. We had the resources to be able to travel. We were traveling all the time, trips to Africa, and it was a really good life. And
but not even just like the affluence of the life that you can live, but more like even the like the deals opportunities that you're working on, right, compared to New Zealand. Like the exposure of stuff that you can see there is fantastic, right?
Oh, look, completely. And look, there's some amazing, those big markets. There's some amazing stuff in them, and I was fortunate. I had a choice to go. I could have stayed, but I don't regret the choice. I don't regret that choice to come back. But I've got some good friends that did the other path where they stayed, and it's choices aren't bad either way, right?
Yeah. No, good on you for bringing that skills and knowledge back, right, and making the decision to be in your home country, right?
Yeah, and look, and what happened on that pathway, I came back and I did an MBA, and I'd worked out some of the MBA stuff can get a bad name on some of the things around it, but I knew, again, I was really strategic in what I wanted from some of the stuff there, and I came back and did it full time, and the incredible thing that came out of it was I started it in late 99, early 2000, and that was when the original Web 1.0 .coms were all blowing up.
Yeah.
And you could, people were joking that it was, from a recruitment point of view, it was B2B back to banking, B2C back to consulting, rather than some of the tech stuff there. But as you sat there and looked at it, and because I was not in a job, I was doing the degree full time. You looked at some of the stuff that was happening with the tech side of things, and it was incredibly obvious that the future was going to be online, and that was one of the things in the early 20 years ago now. If I hadn't had that experience on the thing there too, and particularly looking at some of the tech stuff, I don't know whether I would have recognised how important the tech stuff was going to be.
Yeah, and so much so because you actively worked and founded some businesses, right?
Yeah, I've done a couple of startups. I had and again was one of the. I came out of the MBA and worked for Sir Rob Cameron at Cameron Partners, which was fantastic experience. And again, I pushed myself into a couple of the tech deals that were happening there.
Yeah.
Got involved in a couple of startups there. Ended up shutting one of them down when we couldn't raise the capital, but that introduced me to Jenny Morell, and Jenny went, look, I'm not going to give you, who was the VC at Number 8 Ventures at that stage, she said, we're not going to give you the capital, but do you want to come and do some work here with us? So I ended up working with Jenny on some of the tech stuff, and I whenever I catch up with Jenny, she laughs and we sort of go, and she goes, yeah, you're now getting to do the work now with Clare Capital that I kind of wanted you to do around that. But at that stage, the tech side of things was still really early.
Yeah.
I got back into the investment banking side of things, and then met Rowan Simpson and JD and some of the stuff, and we set up a fintech called Value Cruncher around 2006, 2007, which was an attempt to bring some of the corporate finance frameworks we used and make them more available in that in that online world.
Yeah.
And it's fascinating to see where a whole lot of the types of tools have gone. We were too early, and the joke I make is, we created something for 6 people, and I knew 4 of them. But it was fantastic. we got quite a lot of exposure in some niche areas, and the Google Finance guys had me in New York, Yahoo Finance had me in Silicon Valley, and we were early on in some stuff there, and that was I know what it's like as a founder to go out and raise money and have people tell you no, have people tell you that you don't have the you've got it wrong, and and again people do some of the stuff there, have build some of those relationships, and I've somebody like so Rowan and and JD and his team, when it was Mindscape pre-Raygun, were the team that built the back end of Value Cruncher, and again, I'm incredibly grateful for that, because that process, one, exposed me to some people that are some of my closest friends now, but also it's one of those things now as founders come to me and go, oh yeah, you're the investment banking thing around. I go, no, I've been where you are. I've walked in your shoes, and I think that is one of the things that a bunch of the people I get some credit for, some street cred for you've been where we are around it, so I can look people in the eyes.
Wholeheartedly, as a recruitment agency, recruitment consultant, I had exposure to tech startups before I'd worked in a startup, but it wasn't until that I physically worked in a startup and founded a few companies that I was able to walk in and really truly get it, and so you know the vernacular, the feelings, everything about it. And so it's obvious when someone has come from that industry when they're holding a conversation. And so, I think it's good. I just want to go back a little bit.
Sure.
MBA, you're taking an MBA. Would you redo it again?
Yeah,
and
at a heartbeat.
Yeah. And so what did you get out of it? Because it's like, we talk about this all the time, like people are like, do I do it? Do I not do it?
Yeah. So here's my story as to around it. So when I was in London, I basically did two key jobs. The second one was at working for Citigroup, which I mentioned before. But prior to that, when I'd first come in, I did some work for Bayer, the German group there, and ended up involved in some restructuring and some mergers and acquisitions work that they were doing in Europe. And I had my accounting degree with a bit of finance in there. And we ended up working with some consultants from Boston Consulting Group. And these guys were, they were about my age, maybe a little bit older and things like that. And we went through, they took us through some of the strategy work, and there was a bunch of game theory and some reasonably high-end structured things around it. And I was like, whoa, my undergraduate degree is out of its depth here. And the story I tell is I ended up in a pub down near Richmond with a group of these consultants, and they taught me basic game theory with pints of beer over the thing. And I was like, wow, hold on. And I literally said to them, where did you learn this? And they were like, on our MBAs, which was one of those ones where I went, okay, I'm now starting to see I want to be doing this work, and I don't have the skill set that some of my contemporaries are. So, I mean, when I was with Citigroup, we were talking about they were going to fund an MBA in the States for me. But again, that was where I ended up and decided to come back and sort of almost control my own destiny with it. Mm-hmm. And so doing the MBA, I didn't come into the MBA going, I'm going to do this to radically change my life. I came into the MBA going, I want some of these skills. I have a undergraduate degree that is reasonably narrow, really good. I can beat you up on accounting and things like that. I know a bunch of finance, but I need more. And I got incredibly lucky and led the former chair of what's then Telecom, now Spark, was Sir Roderick Dean, and he ended up being one of the key lecturers on he was semi-retired and was going, I want to give something back. And in a small group setting, he was the one that taught a bunch of the financial economics things. So we got into a whole lot of the game theory. Again, when it came to negotiation skills, John Onto from Melbourne Business School came over and did a bunch of the stuff there on some of the negotiation components there. So to a large extent, what I was looking for was to broaden out that skill set, and the MBA delivered that. I wasn't looking for it to change my life. I knew the path I wanted to go down, but I needed to have the tools, and I needed to go through that process to do it. And I have a bunch of friends, and again from the MBA, where it didn't deliver what they were looking for. But in my end, it was in my late 20s. I got 15 months full time because my incredibly talented wife was working for Clemenger, the advertising agency. She said, "I don't want to lose you for 3 years. Go and do the MBA full time." So I did, which allowed me, again, Plato's parable of the caves, to take myself away from a business type setting, immerse myself in some of the skills like that. But I had sort of almost 10 years of work experience to lean on, because I'd seen some of the stuff in North America and in Europe, which then I was able to apply then. And I also could see the tech stuff coming through. And then, again, the likes of Sir Roderick Dean opened up his networks and said, which areas would you like to work in? And, Cameron Partners, or Cameron & Co. at that stage, Cameron Partners were recruiting some people, and, and I grabbed that with the likes of Sir Roderick as a referee.
And so you leveled up then?
Yeah, big time.
And so how do you go applying these techniques that you've learned into business straight away? Do you feel confident enough to take these, learnings and then just go, all right, I can do this now going forward? Or do you fumble your way through?
Again, I mean, there is always, it's one of those things where I think part of the experience we all go through is there is always an element there where you go, that imposter syndrome type thing around it. And I think anyone that's doing something at a senior level goes through an element of that. But and again, I'm incredibly grateful for my time at Cameron Partners, because we went in and again, we fell back to those fundamental frameworks, be it corporate finance, but also some of the base, just financial economics work. And we were working on really, really hard real world problems. And they worked. The frameworks, they're bottom up, fundamental thinking. The MBA was fantastic for building the base, but then I went into an environment where where we used those frameworks to solve real world hard problems, and they worked. And that was, if I look back on, my career, my 20s were fantastic, but it was once I'd done the MBA, got the experience at Cameron Partners, and seen how the solutions actually worked in the real world. My career, the workload we do is solving those complicated and complex real world problems. Being able to fall back to those fundamental frameworks, and with the experience on top of it, the more the joke we say is, we've seen this movie before. The movie is always slightly different, but we stay within the lane of what we know, and knowing and being able to apply a bunch of those frameworks. It gives you that confidence to be able to go into some things. I don't ever go into a room. I'm always confident that if I'm being asked into a room to solve a particular problem, I will always fall back to those frameworks and that structured way of doing it. And I can't think of the last time I'm happy to say I don't know at times as well, but for the problems we're asked to typically solve, we can fall back to those, and I know we'll be able to find a pathway through that. And everybody spends a bunch of time sort of looking for, where's the adult in the room to do some of the stuff there around it? One of the experiences has been getting to that stage and actually trusting that what you're doing, and you're confident in that, which means that you can apply some of those things. But interesting as well, end of last year, I talked about, we had John Onto from Melbourne Business School do the negotiation skill stuff. I took my team to the Port Nick Yacht Club for a day and basically ran them through a whole lot of that. that negotiation skills type work. I've got a scenario planning exercise, which is we're going to run in the next month or so, which again is trying, because a lot of my team are at that stage in their 20s where I was, which is very, very finance and accounting focused type thing. And I'm going, okay, how do we expand and show you the different skills you're going to need to be able to do this job as well as you can.
That's good. Do you ever see yourself going back to the old stomping ground of school and lecturing?
Part of me, I like the idea of it, and we've talked about some of the stuff. When I caught up with one of my team yesterday, I said to her, I'm intrigued by that, but maybe, but there's too much. So there's a bit of work to do. There's a bit of stuff to do now.
So talk me through, I think a lot of people that are going to be listening to this podcast are going to be really curious to get an inside look at the M&A sort of process. And so talk me through, so Dom over here has a software company, selling Jordans or whatever he is, right? And so some companies called him up and said, hey, I'm interested in a strategic partnership, He says, holy fuck, that's code word for they want to acquire me. Yep. I'm going to go and chat with Mark.
Yep.
Talk me through the process if you can at a,
totally. So look, the comment, one of the observations, because a lot of people think every company's got an M&A, somebody will buy their business. And the bad news is that's not the case. Yeah. There's a lot of businesses that won't ever be bought by anyone. The comment, a lot of New Zealanders will go, oh, I've been approached by this big strategic party, or this big competitor, and they want to look at acquiring us, but I don't think the time's right, so I've pushed them away. And we go, no, don't. Almost, if there's a big strategic party there talking to you, we think you should engage with that.
Start a dialogue.
Because again, even if you don't do it now, it puts you on the radar screen around it. Interestingly, we break acquirers into two sets. So there are strategic acquirers, which are the people that are in your line of business. Mm-hmm. But one of the things we're starting to see with a lot of New Zealand tech companies now is the financial acquirers. So there's a lot of companies and examples that are Constellation Software, Jonas Software. There are a group of financial players that have approached New Zealand companies and are constantly coming to New Zealand tech companies and almost trying to buy them. Yeah. Now, the financial buyers the way they make money is based on by buying at a low price and holding them, where you will get, if a financial buyer comes and bangs on the door, you can probably most of the time push them away. Yeah. But it's when, using the sneaker software example, if one of the big retail retail players comes and says, we want what you're doing. We think you should engage with them around it. Yeah. So if somebody comes in that situation and says, okay, I've been approached by this party, one of the other mistakes we see a lot of New Zealand companies make is going, oh, wow, they take it as a real compliment, which they absolutely should, that a company's approached them. But one of the things they go is, oh, well, I wouldn't want to talk to anyone else because I don't want to piss them off. And that's, if anyone took one thing away from this conversation is, in North America, in Europe and that, if somebody approaches, the only way you're going to get any upside on some of the stuff is by running a competitive process. Yeah. And one of the things I constantly say is no one gets what they deserve, they get what they negotiate. Yeah. And the only way you're going to be able to negotiate something there is to have multiple parties into the process. Same
as my industry, right? If I got you a job offer from one company, I'd say, great, let's utilise that job offer to get you 3 or 4 other offers now.
Yeah. Now, a lot of New Zealand companies don't do that. Yeah. They go, well, I don't want to piss this party off or something like that. And you're like, it's the party coming to acquire you. It's their job to acquire you. You're being, the naive component. So what we would say then, if somebody comes, a credible strategic party comes and says we want to acquire them, what we would then, if somebody comes to us, we would go, that's great. And you would start the conversation with the party there, because what they will do is they'll start asking for some information. And part of what you want them to do is to give them enough information to put together what's called a non-binding indicative offer. Right, we'll give you some information, but we'll limit how much it is. We'll give you only enough for you to send a signal of what the business is worth. Now, in parallel with that, we would sit down with the owners of the business and say, who are the other parties that are credible strategic acquirers, who would like to acquire you and who has the financial capability to acquire you. And then you will reach out to those, we would reach out to those other parties and say, in a situation like this, we would turn around and the messaging would be, Company X has received an offer from a credible strategic acquirer. We're moving forward with a process of engaging around that. The shareholders of Sneaker Company, Sneaker Software Company, or whatever the company is, has always held these other, we would say, has always held you in high regard. We would like to see if you would like to become part of this process. Because we would not want you to find out that we had been acquired and we had not come and had that conversation with you. And that is how you will typically, in a situation like that, because what you want is you want multiple parties on the same timeline. Because one thing that often people will come to us almost too late and go, I've got this offer, how do I get another one? You're like, well, hold on, you're going to lose. You haven't created a situation where there's a structured process to have everybody on the same timeline to generate that competitive tension to get a higher price.
Out of interest, do you know any of the data on what is the percentage that they'll take the first offer versus the second offer?
I don't know, and again, a lot of the time. We literally had somebody sent me a note, again, because we get some of the ones around it, and we knew somebody had introduced us to them and said, you should have a conversation. And this party turned around and said, this private equity company came to us and they came to us and, they're going to invest in us and then they've got a buyer for us down the track. And we were like, oh my God, that's a problem because, you're giving away a bunch of the value. But I think it's probably a bigger number than you would expect. But in international markets, absolutely not. There are, the US and Europe, if somebody comes, people instantaneously, go out and do some of the stuff there, or bring an advisor in to run a structured process. Interestingly, again, we love working with entrepreneurs, but we do a bunch of work for sort of corporates, and the corporates are actually a hell of a lot better at that.
Well, they're used to it, right? It's muscle memory for them versus a startup founder.
It's muscle memory, but also at times it's not as personal, because they're sitting there going, look, it's my job to make sure I get the highest quality, the highest value outcome possible, and they will come in and be more comfortable with that, where a bunch of entrepreneurs will almost feel they need to, it's their job to be the person they feel they should be the one doing that.
And is it easy to get deal fever when you're an entrepreneur?
Yeah, look, I think it is. Look, one of the things I always say is and it's one of the most humbling things that we get to do is to help entrepreneurs through exit journeys. One of the first deals we did at Clare Capital, we helped a company called Met Ocean, which was a marine forecasting and hindcasting business, be acquired by the Met Service. And there were a group of scientists there, and they were like, oh, look, Mark, we want you to, just guide us through this process, but, you'll sit to one side and we'll do some of the stuff. And then by the end of it, they were like, we don't want to be in the room, just go in and do some of the stuff there. And Peter McComb, who was the CEO there, who's incredibly talented entrepreneur, for years, a number of years afterwards, he was my go-to guy on some of the stuff. And a couple of times I said, look, I haven't spoken to you for a period of time. The acquisition went well and things like that. And he said, look, Mark, we're always happy to talk about you because you were a key part of that journey going through that. And that's part of the bit, Lyd, why I'd like to work with entrepreneurs all the time, because you can do some of the stuff and help them through it. But there is absolutely an element of selling people's babies.
So how do you so 2 questions here. What percentage of deals go through? So when your company's had an opportunity for an acquisition, what percentage of them actually sell?
Yeah, my team, when they're listening to this, have been talking about having a bingo card for markisms that'll come out of it. Yeah, take it off. Yeah. So ticking off one of the ones that I would say is it depends. Yeah. It really does. It's hard to we've got sort of firm-wide numbers, and it's we do really, really well in Lyd. It's just over a half of the ones do actually complete. Yeah. The interesting thing is some of the deals, Lyd, you think have got the lowest chance of completing actually do, and some of the ones you go, that's a no-brainer, don't. Yeah. So it's very hard to tell at times, and in the deals, part of where we're there for, because a number of people think, an M&A transaction's straightforward and it goes bang, 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 bang. And there are a number of steps that M&A processes go through, but there's always a bit where it goes off the rails, and part of our job is to bring that back in. And sometimes there are things that come out of left field which you can't deal with, and other times, that you see situations where you're like, there's a very low chance that's going to happen, and for a bunch of reasons, a party will be incredibly motivated to make a transaction happen on the other time, which is when it's like when you're doing your recruitment and somebody works out they really, really, really need somebody or want somebody.
Yeah. That's when you're like, all right, we can do work here. Yeah. So then the reason why I asked you that question is because, I've seen a lot of founders first-hand experience where they're like, oh, we've got an opportunity to get the fuck out now because I'm so burnt out and so tired. Yeah, this is great. And then they're starting to spend the money in their head already. Yep. They're like fantasizing about their life after exit. And then unfortunately they go through a long process for the M&A and then it falls over for whatever reason. And then it just cripples them. Yep. They can't get back on. Yep. And so is this something that's commonplace?
That's incredibly common. It's incredibly common, and the M&A process is incredibly draining. And again, part of the reason why we exist is to help facilitate some of that stuff through. Nothing is done until it's done, which I imagine is similar in your game on some of the stuff.
There's so many points of break, right?
Yeah, and M&A, absolutely, that is part of it. Again, one of the things we're always saying to people as well is you can't throw the keys to, somebody isn't going to, it's very rare for somebody to come in and say, I'll buy your company and you can leave straight away, and
you're going to be there for a while, mate.
Yeah, exactly. You need to think that you're going to be there for 12 to 24 months around it, and typically a lot of the New Zealand tech businesses, and if we were selling a talent army or something like that, you're not going to be able to get out of there. And there's likely to be a component of the transaction, the ultimate transaction value, which will be about keeping key people, retaining key staff for a period of time, but also maintaining, or if you've got some big growth numbers, actually having being able to show that you can deliver that level of financial performance. So it's not there's still an element of work that needs to be done there around it. Yeah.
And what can I'm a big advocate. I also own an HR company or people and culture company where we're trying to introduce the right people and culture processes and experience early to help people to be able to scale. And so what can companies do from an M&A lens to get better early?
Yeah, I mean, so again, because they're a client and we did a couple of capital raises for them, and I'm actually a shareholder of Raygun. Using Raygun as an example, and JD's is incredibly well organised on that. There's two things which are really, really important and really useful. Having a couple of pages just which summarises what the business is. Because a bunch of people will turn around and go, because when people approach companies, often the founders and people within the company will go, oh yeah, our competitor knows all of this about us. They know our experiences. Most cases, they know absolutely nothing.
Perception, right?
They have the perception, but even incredibly basic stuff, people don't get. So it's incredibly useful if you've got almost a short summary, and if you're being approached by some parties, to have 1 or 2 pages which says, this is what we do, this is who we are, this is who owns us, here are some high-level non-confidential metrics that we're happy to share. That's incredibly valuable. But the other thing which, and using Raygun as an example, we've got the Raygun team actually have an initial due diligence set of folders in a Dropbox, which is last 3 years financial performance, constitution, shareholders agreement, and they've got a group of the materials there which they keep up to date. JD will probably admit that it's probably slightly out of date at various stages, but we went through a thing with them which allowed them to have some of that base material together. And because again, all entrepreneurs and that, as with materials around their company, often they haven't dotted the I's and crossed the T's with a lot of the DD stuff. And look, there is always an element of you're going to have to pull a bunch of stuff together there. But if you've got some base level of information, and we've got a thing of sort of 10 things that if they've got some of the key stuff, which includes even basic things like standard employment contract without any names or anything like that on it, that's the type of stuff that if somebody said, look, I really want to get into some stuff, you can go, right, well, here's 10 things from predominantly financials, and with SaaS companies, if you've got some cohort analysis and anonymized cohort analysis and things like that, that's the type of information there that can be really useful on that.
Awesome. Hey, question for you. We are not in the same year coming ahead than we have been in the last few years. It's been really good for the NZ tech industry. Yep. It's definitely going to be tougher, right? And raising money is tough at the moment. Potentially people were gearing for a sale. It's fallen off now. What advice can you give founders and startups? Yeah,
I mean, we have had it's been an amazing period of time. We thought with COVID it was going to shut a bunch of stuff down. It really didn't. We are still seeing, we've got a full slate of M&A work to do for the next 6 months. So one of the things, tech is slightly different to some of the other stuff going through. You are right in Lid, on a capital raising point of view, there is less stuff happening out there, and we are certainly seeing parties we're in processes with look at the prices they are paying, where traditionally, for the last period of time, it's been really good. One of the things we are seeing still is a lot of the things we're seeing involve private equity out of Europe and Asia, with portfolio companies where a private equity fund in New York has got a New York-based company, and they're going, we have capital for you to go and buy things. Everything here in North America looks expensive, but Australia and New Zealand still looks cheap. So we are still seeing a lot of those types of transactions sort of still pushing through. But we expect it's going to be tougher over that next period of time. But again, if you've got strategic parties coming, using your sneaker software example type thing, if the big granddaddy sneaker software company comes and knocks on the door, we still think you should be having that conversation around it because, I mean, there are some of the pieces there. Deals will likely get harder to do, and there is definitely people will be looking at price points and things like that, but there is still a lot of global capital looking for a home, and credit to the New Zealand entrepreneurs, particularly in that sort of SaaS and software space, the reputation globally of New Zealand tech, like it's really, really, really high. We're talking to big global Fortune 500 companies, and they know about New Zealand, and they know about the quality of stuff that's being built down here.
100% agree, and the same that I'm experiencing. So we work with big global tech companies, and they like just in passing comments now, they're like, holy shit, that X company or that Y company or the company that's been acquired that now has a Kiwi person sitting on a VP role globally that they're like, holy fuck, this guy's good or this lady's good.
Yeah, I mean, what the story I tell is I was on a call with a literally one of the 50 biggest software companies in the world, and on a call they were looking at buying a New Zealand company, and we did at the end of the video, the guy said, oh, Mark, can you hang out for a minute? And the M&A team in Silicon Valley said, look, this one's not for us for these reasons, but this is what we're looking for. We just are seeing so much great stuff come. I don't know what you're doing down there, but there's so much great stuff coming out. We want to see everything out of New Zealand that fits these sort of criteria, and we're like, whoa, and it's big names sort of wanting to understand what the option sets are there around it.
Yeah,
which is cool, and a massive compliment to the ecosystem that's been built here in New Zealand, because we hear people come to us and go, oh, what help could the government do? What could everybody do around here? We're like, just stay out of everyone's way, because what's being built down, people are doing it right.
Yeah. And do you think that's because we just have to go out and get customers data like straight away? Like, we don't have the luxury of raising such big amounts of money that we have to find something that's working and go after it?
Yeah, look, I think that's part of it. Serge Van Dam and I have had the conversation about, exactly why is B2B SaaS so good? Look, we don't have that big consumer market where, we can experiment with stuff. So we need to go out and do some of the things there. But the likes of Xero and PushPay and, the Sequence and that have shown people, there's a playbook here we know how to do. We still have a view that we are far better at building product than selling it, and there's still if we had the sales functions are not quite where the product development functions are within some of the New Zealand companies, but I mean that's still improving. But yeah, I think that element of I think we're good at some of this stuff, and the world's taking notice.
Awesome, mate. So advice from you then, to summarise, would be get in touch with people like yourself at Clare Capital early to, once if something happens, you can walk them through the process, you can help them entertain those conversations.
We'll always have a confidential, free, no obligation chat with anyone. If somebody's facing up to a commercial transaction, be it somebody's offered them capital or there's a credible merger and acquisition conversation, we'll always, that first conversation, like confidential, no obligation, come and have that chat. We'll try and give some guidance there and go, we can help you here, or if not, or if we think there's a problem there or something like that, we'll do that. So always happy to have that conversation. And I mean, personally, that's you called up and sort of said, hey, this is what's happening.
It was invaluable. Like, I had a real weird one for you, right? Like, I had a tech company try to acquire a recruitment company, and I was confused.
Yeah, and look, and again, we had a couple of conversations type thing like that around it, and we're always, we're very, very happy to do that. And again, sometimes, if it goes to that next stage and people go, I need help to manage this through and maybe to widen that out, that's where we then come in and help some stuff through.
I have to admit, so I had, as a guy that hadn't been through that process myself, I had confidence going into a chat with an M&A person from Harvard in Silicon Valley, that I was able to go in and say, well, this is what I'm looking for. And here's some information that you would not want. I'm looking for a non-binding offer that I can then go off and consider and take forward. So it was invaluable. I would encourage people to do business with him, mate. It was good. How does the commercialness work of investment banking? Do you take your money from the sale?
Yeah, I mean, we typically our remuneration structures are based on, we don't do anything by the hour. So our remuneration structures, typically if somebody comes to us and if they want us to put some materials together to help something there, we'll typically do a fixed fee component up front, which basically covers just some of our costs on doing some of that. If the transaction then progresses on, we'll typically charge a monthly retainer, which again is a fixed fee. Often we don't get rich off some of the stuff there. It's about covering some costs, and then it's a percentage of the transaction for which again it depends on some of the stuff there, but is typically in that sort of 2 to 4% range type thing around it. And again, transactions don't get completed. There's only that covering of some of those costs that go through, and that's the nature of our game.
Yeah, and I think that 2 to 4% usually with investment bankers is covered by the deal being a little bit bigger.
Yeah, well, we would say, I mean, there's a couple. Yeah, it's again, we debate it. Like, we've just built a new website, and one of the things we talked about was actually putting a couple of case studies of where we'd made 20 and 40 times our fees for clients on negotiating outcomes and things like that. And we actually went, oh God, look, we felt that was the wrong thing. That was the wrong thing to do. But yeah, there's a number of stages there, and our argument, one of the things, transactions are typically completed on what are called a cash and debt-free basis. So, you get to take any excess cash out, but you also have to pay off any debt on the deal. But one of the components there is there's typically a working capital calculation in there, and it's one of the most contentious parts of, how much money should be left in the business. And we typically, our fee is, we more than cover our fee just by beating people up on some of the stuff there. But getting the getting the deal done, but two, we back ourselves to get a higher value outcome. And at times when people have come in, if somebody's put an offer on the table, and we'll say, okay, we'll take, if somebody's come to us quite late where they've got an offer on the table, and we'll say, okay, well, our fee is a percentage of whatever we raise above that, what you've already got on the table type thing, we'll do that type of thing as well in some of the stuff there. Because if we're not adding value, and that's part of it, people have a tendency to go, well, people underestimate how hard it is to get deals actually completed. But at the same time, there is the hard cash component of how much value we can add on some of that stuff as well.
So 2 last questions, and then we'll call it. I could talk for another hour, but let's do that. I'll fly over a beer. You spend a lot of time working on other people's business. What does the future of Clare Capital look like?
Yeah, really interesting one. Again, we've spent some time with the big investment banks, the Jardins and Forsyth Bars and things like that. And I remember having a conversation with the Jardin team where they go, we think there are 2 ways of doing this. It's one, to be big like us and do everything, or to be 2, super niche like what you're doing and focus on that. We've gone through processes of looking at, do we add an asset management arm or something like that around it? And I think, what we're doing is really working. We've got some great clients. We're getting some great outcomes there. We're worried about taking our eye off the ball to an extent there around it. And so, we've made the call to stay for the next period of time doing what we're doing. New Zealand's our key market, but we're being pulled into Australia by various things at the moment, and we're doing that all from New Zealand here. But I can see us doing more work there. we do no work for government or anything like that. We do only commercial sort of work there around it, and doing that M&A work for corporates and things like that. We've got a reasonably small team. I got a team of 9 at the moment. Yeah, I can see us adding. Like we're recruiting at the moment. We're looking to possibly add a few more to that. But again, do I want it to be too big and be competing with the KPMGs, EYs, PwCs, Deloittes of this world? No, that's I'm happy to focus on that. But yeah, I mean, remain niche at that stage.
I completely empathise with that exact same thoughts I am. What bingo words did we not get out, mate?
I think we have got most of the. My team will be happy.
Yeah, good to know. And then the last question that I always finish off with is, what makes you happy, mate?
Yeah, I've heard you ask that question. So there's 3 things which are the pieces which I know what makes me happy. I'm very fortunate. I've got a fantastic wife and 2 great kids, and I love spending time with the family, but also with the wider friends and family bit. So that's absolutely a vital part to it there.
Yeah.
But also I know how important the work stuff is to me there, and having challenging work, like it is important to me. I don't. My grandfather, the banker with the National Bank, retired and dropped dead on the golf course 6 months after he retired. And so the joke we've always made in the family is, retirement's killed more people than hard work has within the family. And, I really love what I'm doing, and I can't, yes, the intensity of what I'm working at the moment, probably, I'm in my early 50s. There's another 10, 15 years of that, and then slowing down or some stuff. But I can't imagine ever I don't want to completely step away.
Yeah.
So family, work, but also there's a bunch of, like the football in my 20s and that. There's a bunch of things that I am passionate about, and I like traveling. I like spending time, free diving and doing some of the stuff there, and having that balance to get away. So if I can get that balance right of being there for the family, but having the good work and being able to do some of the stuff, that's Mark Clare and its happy place.
Oh man, that's a secret I hope to unlock completely for everyone one day. Trying to find that right balance. It's the hardest thing in my life,
mate. And there are bunches of times in my life where it's been out of balance in all 3 of those ways.
Yeah.
My kids are now, going to 3rd year of university, and my daughter's in her last year at high school at Wellington East, and we're getting more free. My wife and I are getting more free time to balance that up, and I can see. I've got a good balance at the moment, but I can see a time, we're going to have the kids moving away and a bit of empty nesting and things like that. And again, my wife and I are sort of talking about, okay, well, what does that mean? How does some of that fit? And how do you keep that balance? I'm feeling in a good place with that balance at the moment, and probably better than I have for a long time. But yeah, you're right. There are certainly times where I haven't had it right and things like that. And I know it's a constant battle.
Excellent, mate. All right, well, I'll let you get on with these rich portfolio of M&A deals that you're taking forward, mate. But thank you so much for coming on and demystifying what investment banking is in startup, and for talking us through, how that process works. I think that's something that people are going to find really fascinating.
Cool. Look, thank you. That's been a fun chat.
I'm so grateful we have people like Mark Clare in the community and the startup ecosystem that give time, that help us out. And from first-hand experience, Mark literally took phone calls from me at 9:00 at night to ask him questions. He does that for everyone. I'm thankful that he came onto the podcast. He really broke down what M&A does, like what M&A is in the industry and what investment banking does and how they can help and support us. So thanks so much for coming on, Mark. Thank you to everyone that's watching this podcast. Thank you to our subscribers. For the people that aren't subscribing, please jump on, give us a follow, like, subscribe, share it with people, because we're really hoping to keep building this thing. It's starting to take off now, and we're able to bring people on the podcast that are just helping you more and more. And so thanks for joining, and thanks for watching.
This podcast is produced by John O'Tucker from Empire Films.